We're delighted that the two gentlemen that have joined us have gone totally out of their monthly cycle, so to speak, to be on the show today, because it clearly is a unique week to review and equally to take stock of the week ahead. We saw dramatically on Friday the week close out with oil prices dropping over 10%, $10, with the WTI closing below 70 and Brent closing above. Mike, I've been struggling for the last 24 hours thinking what would be the first question I asked Mike Muller on such a Sunday morning of the long list of things to choose from. And I thought I'd just start at the beginning. Week in review, much of the week was caught in this dance of release of SPR versus the reaction of whether OPEC and OPEC Plus would react. And in the middle of it, we finally had the voice of the IEA director saying that there was an artificial tightness in the market. So I thought I might start there before the drama of Friday and this new COVID outlook, SPR, OPEC reaction. Is there an artificial tightness in the market? Do you agree with Fatih Birol?
Not entirely, because this tightness he's referring to is the fact that OPEC Plus are keeping supply off the market when they have spare capacity. That is a permanent state of affairs, with the exception of one or two moments when we had very high prices and there was virtually no such supply cushion. So whether that OPEC spare supply number is 5 million barrels a day, whatever, it is priced into the market as a given. And yes, of course, people who don't like the inflationary impact of prices that were rising through the 80s and threatening to go closer to $90, $100 will say that is artificial because OPEC Plus are withholding supply from the market. But at the same time, OPEC have kept oil markets much more stable and much less volatile up until Friday than most other commodity markets. So they will feel unjustly accused. So indeed, your four bullets on the opening screen you showed there really sum up what was a week that went from focusing on the impact, magnitude, and reach and relevance of these SPR releases that the Biden administration had been signaling were in the offing for several weeks now, with the advent of new, which quickly became Omicron, the new variant. And it is that, I think, combined with a very illiquid market over US Thanksgiving, that saw the market run stops. And I frankly think that there are a lot of human being traders on leave on Thursday, Friday, and the algorithmic systems and stop orders did the rest. And for a market to go catapulting through 100 and 200-day moving averages, although only just in the case of WTI, after a day of no market in the US, tells you that's indeed what happened. Maybe I'll stop there. And next time, okay, Sean, I'm more than happy to take your first question in advance so we can prepare it together.
Jorge Montepecue, president and founder of Global Markets. Jorge, given the drama at the end of the week, is the SPR release now irrelevant?
Well, this is the beauty about markets. One never knows where all the surprises come from. We have really the world, in my opinion, overreacting to a new variant that we don't know exactly what it does, whether it critically increases mortality, and therefore markets fell because there is an overreaction. I would like to actually expand a little bit on what Mike was saying. Is in one sentence, the algos took over. On Monday, the humans will return, and we'll see what they will do. So we experience this frequent, actually, about twice a year, you have a situation in markets where prices either spike very rapidly or crash as they did on Friday. And then after the machines are done with the cleaning up they have to do and all the cutting of positions, some normality returns to markets. So I think we're in that process where in a few hours we will see really where the humans versus the machines stand.
Jorge, in just looking at the SPR release, just briefly, yes, even though the drama at the end of the week sort of took over the narrative, but the technical idea that the US announced a 50 million barrel release, 32 million barrels or sour crude into a sort of a sweet crude price benchmark that they were trying to lower. I'm just wondering on the technicalities of the American decision, how did you read it?
Uh, okay, we sum up the data. The narrative from the US administration is about 50 million. Actually, 18 had already been earmarked and therefore priced in by the market. Then you have the 32 that were recently announced, but that had also been a little bit priced in. The very critical element to look at is that they are primarily not outright sales, but a sale and a payback in oil. So nothing is really changing. You just get a supply in the short term, but you need to pay it later. It's also the wrong grade for the kind of demand we have right now, because there is a wide sweet to sour spread. And I think we talked a little bit about that last week, that the demand is more on diesel and low cost to refine crude oil. Then you have the support by almost one could call, perhaps this is not very good, but a client state that makes a statement that, yes, we will also release 5 million barrels. And some of those countries like Japan, they have a legal system that actually prevents them from manipulating the market, but they somehow get around it because there's no crisis. You can buy all the oil you want, it's just they didn't like the price. So the overall supply that has happened, which is the US, the minor supply by India and Japan, and the unsure response by China, even though historically they already released some, it doesn't amount to much. I was talking to one analyst yesterday, and we're saying if all this supply is actually real, is less than 1 day of the world's oil consumption. So it's nothing very much, but really the big impact, as we are in a way discussing with a lot of seriousness, is COVID. SPR releases is something that have been already been washed out by the system. And we saw clearly the market response. Initially, there was a minor drop, which was followed then by a price recovery. And that
I suppose we got the drop ahead of the news and then some recovery after it. But Mike, the big drop on Friday, I suppose, tells you that there is concern that this new variant outcome is going to reduce demand. Air flights, we're seeing Israel was the first to announce, I think this morning, that all flights are closed. Nobody can come into Israel now. It's not just from South Africa or whatever, though the US and others have announced flight disruption. So from a clear aviation fuel demand point of view, there's going to be a hit. But the question I would have firstly on that is, the dramatic drop we saw on Friday is a reflection of the fragility in the oil market, regardless of this COVID announcement, that there could have been something else that knocked the market that dramatically. It would demonstrate a real fragility. Your thoughts if this market is this fragile?
I agree with Jorge that it's entirely the virus that pushed the market into running stops and selling off $10 a barrel. The SPR had been largely priced in, and markets are pretty quick to take these things on board. So people who say that it was a confluence of many factors put together, I think had the new variant not emerged with some alarming and maybe incomplete statistical evidence so far, then the market would probably not have done what it did, almost certainly in my mind. Now, there are many advisory banks and consultants out there who have already gone and equated the dimensions of the sell-off, call it $10 a barrel, with the expected demand destruction that equates to in people's minds. And I've seen figures as high as 1.75 million barrels per day, which is pretty much, we're talking sort of Q2 2020 type dimensions again. And I think we have to hasten to caution here that this Omicron variant is still very little known about. The number of cases occur in a country which had virtually run out of COVID cases. Okay, you can argue about measurement in a country that's only 65%, it's still 65% unvaccinated, etc. But I mean, this is not a large number of cases. What spooked people, I think, is the sort of data that came in very late Friday, where you had 2 KLM flights into Amsterdam and 10% of the passengers came off that plane with this Omicron variant, which has a very unique footprint in terms of it's a little similar to the Kent variant. But the Kent variant, also known as Alpha, is to all ends and purposes extinct. It didn't have much of a life. And on the bar charts, on the graphs of the history of various variants of the virus, it hardly features anymore. But what's alarming is the rate at which it became the predominant strain of virus in the country of South Africa. And there was a graphic in the Financial Times that looked pretty alarming because they contrasted it with the Delta and the Beta spread. And those took many, many weeks to establish themselves as the predominant strain, whereas this one went to 80+% in a matter of a few days only. But let's bear in mind, again, it's off an awfully low base. And Delta had more or less gone in South Africa, so it had nothing to compete with, if you like.
But so, I suppose the flip side of the coin, Mike, is the sense of, again, the fragility of the market. I mean, I take the algorithm argument Friday after Thanksgiving isn't a brilliant benchmark, but nonetheless, it was pretty consistent across all equity markets. We saw 3 and 4%, 2.5 to 3.5%. It was a serious down day. That this market all across the financial assets was very toppy for multiple reasons, including the emerging tightness and the job market in the US and other reasons why you would say this is a very top market. And so this knocked it off. I was wondering that fragility is more than just the COVID piece.
It's very clear that the confidence of the market was rattled by fear of the unknown. What exactly are the dimensions of this Omicron variant? And we just don't know. We don't have enough data. We need a few more weeks to elapse. And OPEC Plus, when they convene on Tuesday, won't have enough data either. But they certainly have a very different price set to contemplate than they had in the middle of the week. And one should not be surprised that most commentators are now speculating that OPEC's decisions may likely be very different to what they would have been when the oil price was in the mid to high 80s, because we had, even in the middle of the week, people dismissing the impact of the SPR announcements and markets rallying again. We mustn't forget we traded at $83 on Wednesday before, and even on Friday we were still at $81.65 where we started the day, and then we went as low as 72. So it was nearly a $10 range on Brent, having been open the Friday. So I think fear of the
traders are mostly long. You would think there's a big long position in the market, right?
Well, I would say there was quite a bit of risk off. So yes, a lot of the fundamental traders long, because if you look at any conference such as ADIPEC a couple of weeks back, where you and I were, Sean, I mean, the majority of expert commentators were pretty bullish in their outlook on not just oil prices, but natural gas prices, commodity prices, and indeed the entire economic infrastructure of the world. But I think there's a lot of risk off ahead of Thanksgiving, and there's also a lot of risk off because the financial year is coming to a close and people don't have the same motivation to put risk on as at other times of the year. So that led to a lack of liquidity, and then overlay with that the Thanksgiving weekend or Thanksgiving period late last week, and you have a low liquidity, high move event. And as you quite rightly said, stock markets were roiled as well. Many markets went down. I mean, the CAC in France was down 4.5%, the FTSE was down 3.5%. It was a collective whack to people's confidence. Yeah,
I suppose, Jorge, one might say there's a lot of hubris at the moment in the markets, and that this event may be a cold shower reminder. But you have been bullish ultimately for very fundamental reasons. And given your earlier comment, algorithms versus humans, I sense you would expect the market to rally when it opens.
Yeah. When markets have this kind of behavior, one must remember that this fragility, as you call it, is inherent to the markets, because all the trading systems have trading stops, which Mike was talking about. In addition, you have another element that has become even bigger over time, and that is what is called the negative gamma. And a lot of the producers hedge themselves against adverse price movements, which means to the downside. And as the banks then cover the exposure they have to the producers, that creates that sell-off. So the fragility is inherent, but the narrative regarding consumption has not changed. And I was very keen to talk to the market, observe the human behavior, which at the end of the day drives demand and production. Is what are the changes happening with the Omicron? Has anybody started to cancel their flights or do they continue in the same mode of preparing themselves for Christmas? I can tell you that based on my very superficial review of human behavior in the last 2 days, is nothing has changed. People are going to return, are currently trying to buy tickets out of Singapore to Thailand as the VTL lines and countries continue to open their systems. So in short, I see this, and I will put it very bluntly, as a great buying opportunity for those who like risk, because consumption doesn't show any signs of going down, but actually of increasing.
Well, on that point, Mike, I mean, there is reports, and we have them in our own digest this morning, of OPEC and commentators saying that the SPR release was going to massively swell a surplus into the markets in the first quarter, that this with the continuation of OPEC increases as well. I mean, put aside what is the unknown of this COVID variant, that the trend line that Jorge mentions, with this amount of supply coming into the market, do you see an oversupply? And that even though we didn't see initially the price come off on the back of the SPR, and there was only a few days, that actually the trend line might drift down because this is going to deliver excess supply into a soft market?
Sean, I think it's fair to say the range of expectations is all over the show on supply and demand. And where I stand is a lot more constructive, I think, than the midpoint of the consensus range. I think if this Omicron turns out to be a lot of hot air, in other words, concerns that it will not only impact transportation demand and aviation demand in particular, but also evade the vaccination, with this totally unfounded, in my opinion, right? Then I think a world without Omicron, we were looking at a ever tightening supply picture where the world needed OPEC to put extra volume into the market. And if they don't, and if this turns out to be a false alarm, a false scare, and this virus doesn't turn out to be of concern to energy demand, then the market needs ongoing supply. Now, everyone keeps getting distracted by that first point you made, which is OPEC plus spare capacity, but it is already focused in the hands of a very small number of core OPEC plus countries. And global inventories are at or actually below pre-pandemic levels. And investment hasn't been such in the global upstream, including shale, the fastest to respond sector, to allow a response if global demand were to see a resurgence early next year. So it's awfully difficult to navigate a path through these many, many different scenarios people see, but I'm not in the same camp as those who think there's a supply glut about to hit us. I understand that people are concerned about the demand impact of lockdowns, and we've seen them. It started in Austria, which was 15,000 barrels a day. We've now got restrictions and curfews in the Netherlands, where no establishments are open after 5 p.m., so after dark, basically. That's a semi-lockdown, if you like. There was talk in Germany where Angela Merkel's last sort of parting advice was rebuffed by the Social Democrat new Bundeskanzler, but they may yet reconsider there. I mean, they're looking to protect Christmas. They're looking to protect winter sporting seasons and the income that comes from that sort of tourism, etc. And in Asia, people are going to be looking to protect Chinese New Year. But we've been living with a reality in China where interprovincial travel has been curtailed almost permanently now for a month, with a loss of several 100,000 barrels a day. That's already in the price. And your friend in Hong Kong in the hotel room, just like everybody else who travels to China, has to spend 3 weeks in quarantine. That has been a constant. It hasn't changed as China has wrapped itself in a protective shield of mandatory quarantines.
And now the UK has also, as of yesterday, announced a compulsory quarantine at home, but until you get your first negative COVID for everybody arriving in the country, not just from South Africa.
Yeah, but personally, I don't yet see evidence, and I've got a good sample size here in my own company of people looking to travel home for their festive season, and people flying to the UK are still planning to fly to the UK. Me included. And it's
as you navigate that tomorrow, and maybe we'll give this to Jorge. Jorge, as Mike said, and we'll get his view on it in a minute, but ultimately tomorrow is not going to be any clearer than yesterday, right? This, according to all sort of scientific analysis, it'll take a few weeks to really understand the full dimension of the impact of this. And until that clarity emerges, do you maintain a bullish posture, all business as usual, or do we continue to be ultra cautious of the worst case scenario, so to speak?
I think the market showed that it wants to be cautious, right? There was a panic, actually. To have a 10, 12% decrease in prices is not normal. It's not being cautious. It's being ultra cautious.
Being freaked out, I think.
Yeah. And we saw those stops getting hit, the market feeding the fear onto itself. And this is in reaction to something we don't know. If we are very thoughtful about these issues, we should be ready to expect new variants every month, if not less than that. And some of those variants are going to sound scary. Some may actually have a higher mortality rate. We don't know anything about this variant. This is just another variant. And every variant will be more contagious than the last one, because what the virus wants to do is to replicate itself. So far, we have not heard anything about this variant having a high mortality rate. If anything, some of the reports that came overnight say that the impact is very light.
I mean, but ultimately, we don't.
So we should be, in my opinion, very bullish and ready to rebuild.
You should. Mike, your thoughts on that as well. I mean, there's still so many, as we sort of the unknowns here, right? That the market opens in a few hours with all of those unknowns hanging over it, having collapsed by 12, 13%. Where do you go from here, so to speak, looking forward in a week where OPEC is meeting?
I mean, again, the reaction of the market is drawing a premature conclusion to something we don't know enough about yet. But the statistical likelihood of this variant to be different to all other variants we've seen so far and somehow render vaccines ineffective to severe disease, causing a crunch on hospitalization, ICU capacity, and higher mortality has to be slim. And just statistically, right? And therefore, there's absolutely no chance in my mind that a country like the US will enter into any form of lockdown, even if there is a period of uncertainty. But during this period of uncertainty, you cannot blame European economies for taking the cautionary view, as traditionally winter tends to be a season where hospitals are burdened with a higher rate of regular flu and that sort of stuff. And as a consequence, yes, we will see some losses, as we already quantified for Austria and places like that. And that's going to eat away at demand, but not to the tune that correlates with a $10 per barrel sell-off. Which, as I said before,
you agree with Jorge, this is a buying opportunity?
I don't want to be giving buying or selling signals as Vitor.
Buying on the dip.
But you can imagine that as people return from Thanksgiving in the US, they might take stock of this. If you're sitting in Houston, Texas, where another lockdown is never going to happen in most people's views, they're going to say, what's this? It looks cheap.
Yeah.
But then again, there will be people that say, gosh, we don't know anything yet. There might be people that were away that are still worried about further momentum. The big question you really asked is, what do OPEC Plus do? They don't have time, as I said before. They're going to have to form a judgment based on very preliminary information. Will they err on the side of caution also? I think they might, and that seems to be the consensus out there if you look at the weekend chit-chat on places like Twitter. Because they are at the other end of the spectrum. To me, if you like, they seem a lot more concerned about demand concerns, about economic shocks, about question marks over economic growth in China, about some stats from India where the demand growth didn't come through quite as resolute as expected, and all this has been emanating in anecdotal comments here and there. That said, it would require a major decision on Tuesday in the JMMC for them to change their course, because they've shown that in the light of calls only a month ago for them to put out more than 400,000 barrels a day, they decided not to do so, right? And the market warned that...
Go ahead.
No, the market warned that would send the market catapulting towards $100, and it didn't. So I'm not sure they're going to react with a bout turn quite as quickly as this, unless more information comes to light. And of course, Tuesday is not when they have to decide. They have until when they start producing January oil to decide, right? That said, as is the case in all trading cycles, the January cycle is almost done trading, as we trade so far in advance, especially out here in Asia. And therefore, that will have an impact at the front of the market. But I do think it's worth commenting on the front of market. I mean, I'm looking at WTI structure here. Front spread, 30 cents. Second month to third month, 36 cents. There's been an almighty crunch in the front end of the market. And yes, that is telling you that people think that the scarcity, the perceived tightness of oil at the front is going to be done in by the lack of demand for transportation fuels and aviation fuel in particular, and also by surplus oil being put onto the market by these SPR releases.
You could see contango maybe this week. Let's go to the survey question, which is where we started the conversation. Do you agree with criticism by the IEA chief of artificial tightness in the energy markets? Fatih Birol finally spoke up. There was weeks of this SPR chatter, no word from the IEA, and then after the final whistle was blown, we heard from Fatih Birol. So he sort of gave a big slap, one would have to say, to the big producers in OPEC Plus in his commentary. Do you agree with them? Yes or no? Jorge, there was a strange story, not story, but nonetheless, article in a statement published by the UAE Ministry of Energy and Infrastructure in the middle of last week, in reaction to reports in the Wall Street Journal that they were looking to, roll over with the current agreement. And then there was a bit of they seem to reverse back from that under whatever internal dynamics we don't know, but nonetheless, clearly some button was pressed somewhere on that. Your thoughts on where OPEC Plus are likely to go forward? Obviously now having to take into consideration the COVID thing, forget about not only the SPR issue, but now this very big thing.
Okay, OPEC at this critical time, like in many others, has three possibilities: go up in production, remain the same, or go down, right? With the kind of sell-off we had on Friday, I presume, should be considering staying the same or going down. They cannot be considering adding extra more than they were thinking into that market.
So stick with the 400 or not?
Say again, please.
I say you're saying they either stick with the 400 barrels per day per month, or they pause that for a month or two.
Correct. They will not be considering adding extra over the 400.
No.
This is very natural and reasonable. Now we need to go to the actual reality of their ability to increase production by 400. And actually, they don't have that. The reality is that they're falling behind in their ability to increase markets. So markets are actually very tight. And what the US is looking at as the savior of those markets doesn't have the capacity to go even at the stated amount. They have fallen behind by about 150,000 barrels a day. And if they continue on the track to attempt to increase production even further, they will actually fall even shorter of the goal. This is one of the reasons why I continue to take a path that says the narrative remains bullish, because the oil to cope with the increase in demand is not there.
What do you think OPEC Plus should do, though, Jorge? What do you think they could, or what do you think they should do in light of the information they have in front of them?
I think they have an incredible moment in highlighting the power of the narrative of being cautious and not taking steps to essentially steer the market into certain price direction, but to produce in line with what the market is actually requesting, per se. Not what politicians are requesting, but what the market is demanding. And if I were in OPEC, I would say this is a time to be cautious, and we need to strengthen that narrative. So let's not increase production as much as we were thinking, because the market has sent a loud and clear bell this past Friday.
Okay, survey result, and Mike gets the last word. No. Do you agree with criticism by IEA chief of artificial tightness, the energy markets? No, 2-1, I don't agree. Mike, the week ahead obviously is two big unknowns. What will OPEC do, and what will the COVID information trickle out in terms of this new variant, but ultimately still very much an unknown? How do you see the week ahead?
Well, I'll start with the easy bit. You'll see more cancellations of scheduled flights from Southern Africa to various parts of the world. You'll see a few more countries follow suit. I mean, if Israel went into complete isolation for all international inbound travel, I don't think any other countries will go quite that far, but it just depends on the form that the the Omicron variant takes. But I think we need to look at broader things also here, because I agree with Jorge that OPEC have erred on the side of caution. Post facto, they've proven to be right, and therefore, why should they now err on the side of the opposite? So I think it is likely that they will take into account these fundamentals and the possibility of a demand hit over the winter months. But it's not just Omicron variant. There are also some warning signs over demand. I mean, the market for traded crudes into China, for example, made a dramatic drop earlier last week, which wasn't that well reported perhaps, but just spot grades in terms of differentials to dated Brent dropped $2.5 per barrel, because on the margin, the last few buyers in China were not there. And that brings the specter of unsold barrels building up again from the Atlantic Basin, which is something we had not expected. So I think OPEC will take that into account as well. But the one thing that we should also talk about is weather, because there is a huge variable on weather depending on degree days. And we have this La Nina weather phenomenon where you're due to expect colder than normal weather and polar vortexes coming through into high key demand centers in places like Northeast Asia. And all eyes are on the Korean Peninsula and northern China, which is forecast again to have another cold snap in the coming days, and what that does and how that leads demand in non-oil energy markets. And quite tellingly, perhaps coal prices went up through the course of last week, and the natural gas prices didn't do anything like follow oil. They came down a little bit. So that's lifting pressure is still there. And of course, the oil switching into what was gas demand is in place, and if anything, may accelerate.
That's interesting. I received 2 photographs actually over the weekend of snow falling, as if you like, a snow-capped mountains, icy conditions. One was from my hometown in the west of Ireland, and the other was from a friend in Saudi Arabia, who both witnessed snow cap and icy conditions this weekend. So it's kind of quite a contrast, but the same outcome. Listen, Mike Muller, best of luck navigating the waves this week. I'm sure you will do it as well as you always have. And thank you for jumping in this Sunday. This is your last appearance of this year, and we are incredibly grateful for your insights as always. Happy holidays, and may you get wherever you're hoping to get to. And the same with you, Jorge. Thank you so much for your insights today. And as always, we look forward to catching up with you in the new year. Really appreciate you jumping on as well today. A really important day, and certainly will be exciting as well as nerve-wracking, I'm sure, for those with much on the line as to where the coming days go. All the best and have a good week. Thank you.
Bye, Sean. Thanks, Jorge.